Hello.
Ryan, are you there?
You can hear me. Okay.
Hey!
Whee! Well, this is already going far better than I expected.
It does say morning blast test, but I think we can probably allow that, given that it's a miracle we can even hear each other.
Well, we can blame Tom for that because he set it up. So that's happy.
Useless man.
Yeah, so that's one bus he's already been thrown under. But hello, everybody. I'm assuming other people are in.
Well, actually, it might just be us. Good morning to to each of us.
Let me just quickly message and say that it is live.
I'm amazed we've managed to get this to work.
Well, it might just be me and you talking to each other. I'm not sure. Hang on, 1 sec. Let me just, as it's the first one, I'll take a bit of time. And we are live.
Do you always speak to yourself when you type?
Always, mate. Always. I get bored on my own. So, pretend someone else is in the room. Me and my my voices. Kill. But anyway, where was I? Right, everyone. Thank you for joining the Morning Blast. It is... what day is it? Wednesday, the 24th of September, all day. This is obviously the first recording we've done via Podbean. The reason for it is just space is just getting worse and worse, and we want to make sure that these are recorded, etc., for prosperity, for the kids, for the movie that we make in a few years' time. As usual, myself and Michael will be going through what happened yesterday, and also a preview of looking at what today, themes, kind of market observations, etc. But before we crack on, I'll get the legals out of the way. Nothing discussed on the session on the podcast is trading or investment related or advice, or if there's any kind of endorsement, the usual malarkey. And if you are listening to us, welcome. But Michael, over to you before this all goes to pieces.
Indeed, yeah. Very good morning to everyone. I mean, no one is more shocked that this is working than you or I, Ryan, after the run that we had yesterday.
Tell me what's. But I think the sounds pretty good on my end.
I was going to say your dulcet tones are coming through loud and clear.
Oh, that's great, my darling.
Right, anyway, let's get on to some more serious market stuff. It was a relatively subdued-ish day yesterday, at least in terms of fresh fundamental catalysts, although equities did roll over just a little bit. The S&P down by 0.6%, and NASDAQ down by 0.7%. Before anyone panics, that takes... What the hell? What?
I don't know. I don't have to turn it off. I don't have to turn it off. I found sound effects, but I didn't know how to turn them off.
I think it might be best not to use those.
Yes, no, I accidentally. I didn't mean to do that. I didn't know what had happened. Right, carry on. Sorry.
Righty. Why the hell was I? Yeah, before anyone panics in terms of those declines that we saw in the equity space, it does take both of those literally to where we were yesterday afternoon. So it's not exactly worth worrying about too much. It was also, incidentally, the worst day for both the S&P and the NASDAQ since the 2nd of September. And I think what surprised me most about that was it's almost a miracle that we've gone 3 weeks without a decline of more than 0.5%.
That is phenomenal. Really?
I was going to say, that just speaks to the resilience of the rally that we've had.
Well, I'm not going to ask you because I don't expect you to have this on hand, but I would love to know when the last time that happened or the longest we've gone on.
One of our listeners can be beavering away readily now. Tom Wiseman, he hasn't done enough so far today. He can go and look that up. Meanwhile, I will tell you about the rest of the markets. Treasuries, modest gains across the curve. The dollar pretty much flat, as was everything else in G10, although the greenback is a little bit firmer in early trade this morning. And of course, because the day ended with a Y, gold traded to a new all-time high, up by just shy of 1% for the settlement to $3,775 an ounce. As I said, fresh drivers for financial markets relatively limited yesterday. We did have the latest round of PMI figures and the Eurozone better than expected data, actually, at least as far as the services metric was concerned. That coming in at 51.4. which is a 9-month high. The composite output gauge, that rising to 51.2, which is a 16-month high. Again, strengthening the case that the ECB are done and dusted with rate cuts for the time being. Here in the UK, though, not quite as rosy a picture. We had downside surprises on all three of the PMI metrics. The manufacturing gauge falling to a 5-month low, 46.2. The services metric coming in at 51.9. And the composite output gauge, that came in at a 4-month low of 51. Not entirely surprising, and probably a bit of pre-budget uncertainty and nervousness creeping in and exerting a little bit of pressure on sentiment for businesses across the land. I'll get on to the budget momentarily because there were a few headlines on that yesterday. But before I do, it's worth worth just recapping the plethora of Fed speakers that
Plethora.
we had yesterday. Fed Chair Powell very much reiterating the remarks he made at last week's post-meeting press conference, as you would expect, repeating that there is no risk-free policy path ahead, that he sees one-time price increases likely over the next several quarters, but the long-run inflation expectations remain in line with the 2% target, while also noting that downside employment risks have risen, which is obviously the reason why the Fed delivered the 25 basis point cut last week, and why the Fed are likely to deliver a series of 25 basis point cuts as we move through to the end of the year. Other Fed speakers very much echoing that vibe. Fed 2025 voter Goolsbee was talking about how the current stance is mildly restrictive, but that the neutral rate is between 100 and 125 basis points below where the Fed funds rate currently stands. Vice Chair for Supervision, Michelle Bowman, she was a little bit more dovish than that, noting that it's important the Fed proactively supports the labour market and that policymakers are, quote, at serious risk of being behind the curve. Not really too surprising that Bowman is marking herself out as one of the more dovish members on the FOMC, particularly given that she was, along with Chris Waller, one of the earliest to dissent in favour of policy easing back in July. Sticking with the United States, we did have manufacturing figures from the Richmond Fed yesterday. Their index coming in at -17, down for a prime -7. We also had a 2-year Treasury auction, which stopped through the when issued by 0.1 basis points, so not too bad at all. Moving on to a few other notable headlines from yesterday. I mentioned gold traded to a record high. Of course, Bloomberg sources reporting yesterday that apparently China is seeking to become the custodian of foreign sovereign gold reserves to strengthen, quoting here, to strengthen its standing in the global bullion market. I'm going to be honest, and as you said earlier, Ryan, nothing on this program is ever investment advice. But whether you are a friend or a foe of China, you're probably better off just putting your gold under your mattress than you are in their central bank.
I did tweet about this yesterday, so I don't know if anyone remembers. There's been a few issues in the past of gold bars held by some sovereign banks actually held in other sovereign bank vaults, where the gold bars have been what's called salted, which is basically they hollow out the gold bar, fill it with metal that has very similar properties in terms of the denseness and weight, etc., etc. So that it wouldn't really show up on kind of X-rays and stuff. Now, this already happens. It's been quite prevalent in the past. There's been some quite big stories about it. If I was a central bank holding some serious size in a Chinese vault somewhere, you better believe I'd be doing kind of unannounced visits with me little Dremel and drilling through my gold bars and making sure it's gold all the way through. Because, we speak about on the show quite often that do you ever really own stocks in China? Well, I'll give you a clue. The first thing that will be gone will be the gold bars that they can just lift and carry out.
Yes, absolutely. I fully agree with you on that one. So I think that's probably a bit of a non-starter if we're being completely honest. Sticking in APAC news.
We think, with a rational head, yes, a non-starter. However, if you are a country looking to curry favour with the Chinese government, it's probably a good thing to do to kind of, to grease the wheels, so to speak. So I wouldn't be surprised if some smaller countries in that region do take them up on this. And potentially even you could see Russia doing it, and you could see the likes of Venezuela and even Iran doing it, because, we know they like to keep gold offshore. Well, I say the country does. The people in power like to keep gold offshore for whatever reasons they might be.
Yes, no, that's a fair point. We'll keep an eye on that, and we'll also keep an eye on how much of it gets nicked if anyone does store it.
Right.
Sticking in APAC, the RBNZ overnight confirming that their new governor will be Anna Breyman. For those who have not heard of her, she is currently the deputy governor at the Riksbank. She's due to take over the RBNZ on the 1st of December. That means she will not be in charge for any of the remaining 2 policy decisions that the RBNZ have this year. The Kiwi economy is going downhill rather rapidly, so you would expect pretty significant rate cuts at both of those remaining decisions. Close to home here in Europe, the European Union are investigating US big tech firms once again. This time they're going to scrutinize whether Apple, Google and Microsoft are failing to adequately police financial fraud online. This is according to the FT, citing sources. As with every EU investigation, it will probably go on for about half a decade and then result in a huge fine. But at that point, President Trump will probably be out of the picture because, of course, one of the things things he has been complaining about, and rightly so, is the propensity of the European Union to just basically use these US big tech firms as a bit of a cash cow, as opposed to just levying fines on them for the sake of it, effectively. And a few headlines lastly, just here in the UK. We had a 30-year gilt auction yesterday, which received the fewest orders since 2022. This again speaks to the drying up, really, of demand for long-end gilts. Also, of course, the DMO have taken the pragmatic decision to dramatically trim long-end issuance. The Bank of England are dramatically reducing their long-end gilt sales. But all of these are kind of sticking plasters, ultimately, when we're dealing with the fiscal doom loop that we are here in the UK. And that loop has got deeper, according to ITV. Robert Peston, their political editor, citing sources familiar with the matter. The Treasury are apparently braced for the need to, I'm going to phrase this differently to how he phrased it, and then I'll read out how he phrased it. The Treasury are braced for the need to fill a fiscal hole of about £30 billion. The way that ITV phrased it was, Treasury expects budget tax rises of £30 billion. Now, I just remind anyone, if there is anyone on Whitehall listening, you can cut spending as well. You don't just need to try and increase revenue. But I think this gives a very strong hint as to where the axe is going to fall, so to speak, at the budget on the 26th of November. Of course, the OBR are not due to publish their first forecast until the 3rd of October, which is next Friday. Nevertheless, the working assumption is that this £30 billion hole is made up of £20 billion coming from an OBR downgrade to their productivity expectations and assumptions, a £5 billion, which comes from the failure earlier in the year to cut welfare spending, and a further £5 billion, which is coming from higher than expected debt interest costs. Risk of repetition and sounding like a bit of a broken record, the £5 billion coming from the failure to cut welfare spending was completely within the control of Rachel Reeves, and actually still is within the control of Rachel Reeves if she was bold enough to order her MPs to vote for it. And actually, if you look at a chart of the 10 or the 30-year gilt yield, and certainly compared to G7 peers, it was around that time in early July when we started to see UK yields really decouple from what was going on elsewhere. So I'm also going to say that the £5 billion coming from higher than expected debt interest, that is already was completely in Rachel Reeves' control as well. Rach, if you want some advice, just pick up the blower. Give me a call. I'm always here.
I've noticed there's room to add more people to co-host on it. If she wants to get on the show.
Well, yeah, now we're on this new platform. We can invite guests. Just two other things from here in the UK before I hand back to you, Ryan. Firstly, Revolut. Of course, there's continued rumours about a Revolut IPO. Nothing on that just yet, but nonetheless, they have confirmed they're going to spend £13 billion on its efforts to get 100 million customers globally by the middle of 2027. A total of $4 billion worth of this is going to be invested into the UK business. And of course, Revolut, I believe it was yesterday and maybe the day before, opened their brand new offices in Canary Wharf, which are in the old Thomson Reuters building. So that is a company that's going from strength to strength and will then list in the United States. How these things work. And last but by no means least, Amazon announcing yesterday that all of their Amazon Fresh stores here in the UK are set to close. These are those shops that have no checkouts. You go in, you scan a barcode, and you just pick things up off the shelf. There are apparently 19 of these which are going to close. 5 of them are going to be converted into Whole Foods. But in any case, it looks like that idea has gone a bit stale.
Oh, I see what you've done there. So just on that, there is one on Upper Street, actually, which I walk past quite often.
There's one at the office.
And not once have I ever felt the need to even go in and have a look. I'll be quite frankly.
It's just a Tesco's, basically.
Yeah. But also,
like a Tesco Metro or something.
Am I going crazy, or was there a story a long time ago that said it was meant to be like it would track your hand movements? And
it was people in an office.
And it just, it was one of those that AI stood for a lot of Indians.
Yes.
Pretty much. Also, I need to apologise to Tom because I threw him under the bus saying that it was kind of not working properly. It turns out I might have gone live with the wrong recording. I might have gone live with the test that we were using yesterday. Paul, Cirrus, and a few other people have gone, hang on a second, it's still saying scheduled. That might have been my fault. But look, at least if you found us now, welcome. But anyway, Michael, thank you. I will now be, Clive Lambert's now confirming that that's what I've done. I know I ballsed up. I'm sorry. But look, the fact
as long as no one can hear a recording of what we were on about yesterday.
Oh, God. That's a very good point, actually. Ooh. Yeah. Anyway, quickly moving on before anyone digs that one out.
Right, you do that. I'm going to bring
Uh,
up later.
Right. Overnight news roundup, courtesy of our dear friend Zach. If he's listening, I don't know if he's found us. Hello, Zach. This is the highlights of that. Do follow Zach. Do subscribe to the Substack, etc., etc. Starting off in macro space, Japan's manufacturing slump clouds BOJ outlook. The yen weakened after flash PMI showed Japan's manufacturing sector activity fell at the fastest pace in 6 months in September. That's driven by the declining new orders amid challenging market conditions. However, LDP leadership frontrunner clarified that monetary policy should be decided by the BOJ, with fiscal and monetary policy direction aligned by the government. Comments that quell concerns she would prevent tightening. Former BOJ member Adachi said in October rate hike can't be ruled out if Q2 GDP results upgrade forecasts, with markets maintaining a 50% hike pricing. That's according to Reuters and Bloomberg. Moving over to the US markets, warning signals flash red. Citigroup strategists exit their long-term bond underperformance trade after the Fed attacked. After the trade. I'll start again. Citigroup strategists exited their long-term bond underperformance trade after Fed attacks intensified. There we go. Though last week's unanimous policy decision reduced central bank independence concerns. The tail risk hedge fund Universa warns that market euphoria could drive the S&P 500 another 20% higher to over 8,000 before triggering a 1929 scale crash and global recessions everywhere. Moving on away from that, California's Attorney General slammed Trump's $100,000 H-1B visa fee as creating uncertainty and unpredictability for businesses. So pretty much like what he's done with tariffs. So yeah, at least there's a theme building here. China shifts trade strategy. China said it will no longer seek special developing country treatment in the current and future WTO negotiations, signaling efforts to ease US friction ahead of its planned summit. However, Chinese state banks are selling yuan in spot markets while offsetting with swaps, putting brakes on the currency's recent rise. And also property projects in China, the financing of which is on the government's white list, continues supporting unfinished home construction. Moving over to global central banking moves, Australia's consumer prices rose at the fastest annual pace in a year in August, prompting markets to pare back rate cut expectations, despite the RBA's focused trimmed mean CPI actually declining. Sticking with the antipodes, New Zealand appointed Anna Bremen, as my dear friend Michael just been saying. PIMCO is betting on the falling UK inflation, allowing deeper BOE cuts than markets expect, taking overweight positions in 5-year gilts. That's gone to the press this morning. European fiscal pressure is mounting. No shit, Sherlock. French PM is open to including taxes on top earners and companies in his budget.
Of course he is.
Of course he is. With executives agreeing some form of taxation is inevitable. To be honest, there'll probably be a lot less protests if that's what they're going for. Unfortunately, how French politics works, I'll be surprised if anything goes through. UK Chancellor Reeves. Although that sounded like me doing the hook tour, so maybe I need to change that one. Anyway, UK Chancellor Reeves faces pressure to abandon manifesto pledges on income tax, national insurance and VAT to fill the £30 billion budget hole. I think it's 30 billion for now. 5 German economic institutes have nudged German economic growth forecasts up to 0.2% for Europe's largest economy. To be honest, these have been dashed every kind of month, so I'll be surprised if we get more upgrades. We'll see how that pans out. Geopolitical news. Germany takes EU defence lead. Germany is ready to lead the EU's rearmament drive, pitching itself as a leader for joint arms projects in response to mounting Russian security threats, according to documents seen by the Financial Times. I believe, if I recall correctly from what I was reading late last night, that when they dug through kind of this rearmament packages, pretty much no American or North American firms were listed as being kind of beneficiaries of this money. So for the EU defence names more than anything else, but also we'll see what Trump replies to that. Equity names before I hand back to my friend. OpenAI's infrastructure empire expands. OpenAI announced 5 new US data center sites with Oracle and SoftBank, bringing nearly 7 gigawatts of power online. Mr. Altman said it's just the beginning, envisaging 20 gigawatts needed to meet ChatGPT demands. He acknowledged that uncertainty around computing financing structures stating quote, I don't think we've figured out yet the final form of what the financing for compute looks like, unquote. Basically, what that means in our terms is, quote, I haven't got a fucking clue where this money's coming from, unquote. Memory chip demand surges. This is an ongoing theme. Micron Technology forecast first quarter revenue above estimates, betting on booming demand for high bandwidth memory chips. General Motors, they've upgraded to buy UBS with High Street with $81 per share price target above consensus. What else we got? Mixed corporate signals. Trump administration is seeking up to a 10% equity stake in Lithium Americas as it renegotiates terms of the company's $2.26 billion energy department loan.
This is getting
Yeah,
ridiculous
it
now,
basically, I
to be
do kind of
honest.
think that, pretty much I think there's a lot, I think maybe I'm giving him a disservice, but I think because it's called Lithium Americas, probably adds to the fact he wants to buy into it because it's,
Yeah, I would
you know what I
imagine
mean?
so, yeah.
They have got a big deal with GM as well, so this all kind of ties together. And also, for anyone that hasn't really spotted this yet, over in the Far East at the moment, you've got this super typhoon, Ragaza. I probably butchered the pronunciation, but it's maintained Hong Kong's most severe storm warning for the second longest duration ever. There's a lot of very bad scenes coming out of there at the moment. So not only are we looking for disruptions to commerce and whatnot, but also spare fault for the human suffering that's been over there as well. So just take a moment to think about them if you're having a shitty day. It could be a lot fucking worse. But that's it from me. Back to you in the studio.
Indeed, yes. Well said, Ryan. In terms of today, then, there is not actually that much going on the data docket, to be completely honest with you. In 9 minutes' time, we get the latest IFO sentiment surveys out of Germany. All of the metrics, the business climate, the current assessment, and the expectations figure seen rising from the prior prints. The headline business climate metric that is seen climbing to 89.4, up from a prior 89. In terms of other bits and bobs into the afternoon session, we get the latest new home sales stats out of the United States. Sales seen holding broadly steady in August at 650,000 compared to the 652,000 that we saw in the month of July. Other than that, the speaking calendar is also somewhat lighter today. We're just due to hear from 2027 Fed voter Daly this evening, as well as external BOE MPC member Megan Green. Of course, Green, one of the MPC's hawks, having been in that group of 4 to vote in favour of holding bank rates steady in August when they delivered the last rate cut. And last but not least from me is we have a 5-year Treasury auction at 6 o'clock this evening with $70 billion worth due to be sold off. And you'd expect that to be taken down relatively well, certainly after the solid 2-year sale yesterday. And that is all from me this morning. And I think miraculously, we've managed to get through this whole broadcast without any hiccups.
Well, apart from me going live on the wrong show, but yeah, I think. Well, yeah, apart from everyone going, where the fuck are you? We're over here and starts waiting. But yeah, I think I'm going to take this as a success because it could have been far worse. And I think mine, yours, and Tom's internal bar for how badly this could have gone was very, very bad. And Tom's just liked it. So happy days. But listeners, thank you for bearing with us. Michael, who's always my dear friend. Shout out to Big Tom for setting all this up. I apologize for clicking go live on the wrong one. Yeah, hopefully this makes everything far more fluid for us going forward and also means we can really start pushing out on the podcast stuff. And again, more listeners we get, more time we can commit to these things, etc., etc. Whoever's trying to request to call in, no, that's not happening. But guys, thank you so much. Whatever you're doing today, stay safe, keep it tight, and we'll see you all tomorrow, I hope. See you later. Goodbye.
Indeed. Bye for now.
How do I turn this off?
No, I think you pressed the phone. Oh, there you go. Press